The purpose of this group is to put people in a room together that would normally never be in a room together.
I used to shy away from property manager. I learned that when you get up to a certain number of units.
Wow, that was a good feeling. So I think that was 2012, 2013.
There are investors who are my clients that haven't even bought it yet.
All right, good night, everybody. Welcome back again to Westbank Real Estate Investors. We got a special guest tonight. If you want to take your seats, this is a conversation that you want to listen to tonight for sure. So we've already had guests that have talked about development from the ground up. We've had guests that talked about short-term rentals. We've had guests that talked about a bunch of different strategies, but this is the first time that we have somebody that does all of them instead of just one of them, right? So, first of all, Chris, I just want to tell you I'm proud of you. So we all kind of started together in Noria in rooms just like this, standing by the cookie tray, having conversations. What do you know about this? What do you know about this? What are you doing? What are you doing? And eventually, after doing good business year after year and everybody challenging each other to grow, you have become this super investor, that you are right now. And I just want to start off by saying I'm proud of you. And we are going to get into today the art and science behind investing in self-storages, fully gutted, fully renovated, full value add. This is his first time here tonight, so I want everybody to give him a loud round of applause for Chris Genard. We're gonna have a lot of fun. Chris likes to party. Chris likes to go at 120 miles an hour, so this is gonna be fun. So we're gonna start off with the basics, Chris. How did you even get started in real estate investing?
My story, well, first of all, thanks everybody for coming. I wish, I would have had a little more seats filled, but I'll take what I got. So thank you, Emil, for inviting me and looking forward to talking with you, all of you tonight.
Yep.
How I got started, all right. My background was always sales, okay? So I came from the corporate world of surgical device sales. I had a really good job, and just like what Emil said, always going 120 miles an hour, I had always the intention to be number one, no matter what I did, right? And how I got into real estate was, the first year I'd got a job with this company, we had 300 so reps. I had number 3 out of 300. Next year, number 3 again. So I kept just pushing myself to be number 1. And being number 3, they send me on nice vacations, you give me gifts, things like that. Always motivated me, like the things corporations do. They'll motivate you to get back and be that and keep running a million miles an hour. Well, in 2008, it came down to the last day. I was about literally $900 behind being the top. And I did everything I could to win, and I did. But this was right during 2008, right? And everybody remembers 2008. This is when pretty much the world was going in a wrong direction. And so I got it, number 1 rep. So I'm like, man, what am I gonna get? I got a $1,000 gift certificate to giftcertificate.com. And I had sold millions of dollars and made this company a lot of money, right? If they would have gave me a Rolex watch, I would have said, how do I go out and be number 1 again? But at the time, that was probably the worst thing that had happened to me in my young career. But looking back, it was the best thing that ever happened to me. Because at that point, I'm going, I got to learn something else. And I always knew I wanted to work for myself, but I didn't know what capacity. I don't have the right side brain to go invent a widget, right, or invent some new business. Real estate, right? Tried and true. A lot of people do it, so what? But I know I could probably do it better than at least 90-something% of the population, so I'm going to jump in there. And it started coming to meetings like this. NOREA, that's where I learned, right? Going to New Orleans Real Estate Investors Association. So all of you that are here sitting in the seat right now, this is a place to be if you want to learn, right? And you take the knowledge that you get and you apply it, right? And that's what I did, right? So that's what led me to it. Just with anything, I mean, if you ask me what I do, Emil said I do everything, and he's absolutely right, right? I'm not a one-trick pony. Don't want to be a one-trick pony, right? I'm really what you call an opportunist, right? It all depends. If it makes money, I'm going to look at it. And you have to have the ability to pivot, right? Because what make you pivot is market conditions. Right?
So I like what you said about that. So pivoting, tell us about the pivot from the W-2 into investing and then becoming full-time.
Well, I mean, that's an easy one, right? W-2, right? How much do they take out of your check? A lot, right? You don't even get a chance to write anything off. Most W-2 are waiting for that refund check at the end of the year, right? Learn very on, and if you, I'm sure you've heard this, but if you've not read the book Rich Dad, Poor Dad, you have got to read that, because you have got to be on the right side of the quadrant. If you're on the left side of the quadrant, you want to be figuring out how to get to the right side. Because on the right side, you don't have to pay any tax if you do it the right way. And I don't know about you, but I like to keep what I make.
And the right side, you're talking about on the quadrant is what, business.
The B and the I.
Yeah, that's
Right? The B
investing
and the
in
I
business.
quadrant. On the left side of the quadrant, you got your E and your S. Your E is your employee, your S is your self-employed. Your self-employed are your doctors, your lawyers, your attorneys who basically trade time for money, right? They pay 50 to 60% in tax. They're high earners, right? They pay self-employment tax, right? If you're on the right side of the quadrant, paying capital gains tax. You have ways to defer capital gains tax. You have ways to write things off and avoid self-employment tax. Right? So learning those nuances of it's not how much money you make, it's really about how much money you keep. It's really what it's all about. Right? I like to keep it because I like to reinvest it. And if you have not read that book, that's a game changer. That changes your whole mindset of how you should approach anything that you do.
First deal. So out of W-2, you start going to the NOREA meetings. What was that first deal?
My first deal was actually on the West Bank. It was a wholesale deal. I don't know. I think I picked it up for 40, didn't know what to do at that point, just started sending out emails and looking up cash buyers in the area, and I found a buyer. All right, and I think I wholesaled it for 50. David Birdsong in the back of the room, he closed it for me. That was my first deal. Those were back in the days when I used to take pictures at the closings, because it was a fun time. So I mean, that's how I started wholesale, because I was good at sales, right? I knew how to talk to people. And I was just having this conversation with Emil. Real estate is really not the brick and mortar business, it's a people business, right? If you know how to talk to people and you know how to create win-win agreements, you will get a deal done. But if you approach any transaction as one-sided, you're only looking after it for yourself, it's going to become very apparent. You're not going to make a deal, right? You have to figure out what's important to them and what they want to get out of a transaction, and figure out how to make your side merge with that about what they want. It's called hot buttons. Figure out what their hot buttons are. What are they going to do with the money? If they get the money, what are they going to do with it? Great question to ask. If I gave you cash today, what would you do with it? And they'll open up and tell you what's on their mind and why they need the money.
So you took that strategy from that first deal on the West Bank. So first of all, you started off wholesaling. I didn't know that.
The reason why is, right, if I'm a wholesaler, I want to know every rehabber that's in that market, right? And if I don't know anything about construction, I didn't know anything about construction, you would sell to them and then ask them, can I come by the job, right? And watch them and how they approach their rehabs. And that's exactly what I did. And at the same time, you start to understand what they're looking for, right? And that way, you know, if you're wholesaling, you want to know that project is sold before you even put it under contract, right? Not get under contract and then what do I do, right? You get under contract and know exactly who you're bringing it to, because why? You know your customer. You know your customer. And that's what I did, and that's how I learned. That's how I learned how to do rehab. Then I started saying, I'm not taking the $10,000 check. I want the $50,000 and $60,000 check, right? And I was telling O'Meal, look, we got it. Look, timing's everything, right? And being opportunistic. We started doing this right after Katrina. I mean, there was a lot of opportunity after Katrina to buy dilapidated and flooded and gutted houses and put them back into commerce. And we moved a lot of property, quite a bit of property. So I'm in wholesaling and rehabbing to where I was, at any given time, I probably had 30 projects on the ground, you know, and it was always 120 miles an hour, like we were talking about, always. I would sell some off for short term, the ones I didn't want, right? Everybody knows the properties people don't want, right? And they try to pawn those off on everybody else. Never had that before.
So tell us about the flipping transition. So from W-2 to wholesaling, you're getting into flipping. What is it that you learned? Because you and I went through that Tony Young boot camp when we were trying to get into the flip side of things. What did you learn in that experience that's kind of led you to where you are now?
Well, first of all, is having a measurable approach to anything that you do. Know your numbers, know your market, right? There's two real basic fundamentals that you live by, that I live by when I invest, is supply and demand, and what percentage of replacement cost am I buying this asset at?
Right. And how you measure those? What resources you using to measure those?
I know what my cost to build is, right? So my cost to build new versus buying existing and renovating. Can I buy and renovate that asset below what it would cost me to build it new? Because I'm already at an advantage if I get it at a certain percentage of replacement cost versus new construction. New construction is all about supply and demand. That makes a lot more sense in the commercial world as well, but it's relatable back to the residential world as well. But really, when I'm targeting commercial assets to convert to storage, it's all about percentage of replacement cost, because I like conversions. It's all about repurposing old buildings and figuring out a way to do something creative with it that no one else can figure out.
Are you researching replacement costs from insurance companies, Google? How are you getting replacement costs?
Because I know my numbers of what it would take to build new. Like in the self-storage, I know exactly how much it would take to build a facility, right? $65 to $70 a square foot on a multi-story, $45 to $50 on a single story, right? So am I gonna buy a building at $50 a square foot? Probably not, right? When I can just build one, right? So I know right now what price point that I need to target to make the transaction, to make the deal work, right? I'm targeting assets under $20 a square foot. Because if I have a structure and it comes with the land, I'm already at a disadvantage, because most people in the self-storage world, they just build new or they buy an existing facility. There's not many people that know. You can't transition from building stick frame homes to that type of construction very easily, right? And I didn't even try to, but you know what I did? I have a partner that is very good at it, who's very, very good at it. So that combination works very well.
And so from the flipping, how do you get into? I'm sorry. Let me back up. You talked about measuring supply and demand, and measuring your cost. So you talked about cost. What about measuring supply and demand? What's the indicator, the metric you could put a finger on and get a pulse to measure supply and demand?
Well, if I was looking at residential, I would know I would look at the market as a whole and see what the trends are. Is homes trending up or homes trending down, right? Because if you're flipping homes, you're in the spec market. You're in the speculative investment. It's not a long-term approach for you where you can weather peaks and valleys, right? Because all real estate's peaks and valleys, right? If you're in it for the long term, usually you'll be stable. But if you're speculating, you need to know what your trends are, because by the time you go to sell it, those trends may have moved in a different direction, right? And that price you thought you were going to sell it for didn't happen, right? And then the home sits on the market, it becomes a stale listing, and then all you're doing is dropping price, right? That's why I used to like playing in the first-time home buyer market, because I had multiple exit strategies, right? If I build and I renovated $1 million home, I'm not going to be able to rent it out. I'm not going to be able to sell it on a bond for deed, right? But if I'm playing in the $150,000 to $350,000 range, I've got multiple exits, right? So enter in any deal, no, you need to have multiple exits. If I build an $800,000 home, I got one exit, and that's to sell it. And if it's not selling, what's my option? Drop my price. Then you drop your price, and you drop your price. And before you know it, I'm like, I didn't make any money. This is hard, right? And you give up, right? But there's an old saying is you learn more from your failures than you do your successes, right? So take everything as a learning experience, but don't let the fear of failure hold you back from taking action, right? Because by taking action and doing it, you actually learn something along the way. And who cares if it didn't work out? But learn from what you did and get back on whatever you want to ride and do it again.
So tell us about these self-storages. Let's dig into that right now. So we move out of flipping. What gave you the confidence to jump into this side of the not only just commercial, but self-storages? Because I've been noticing an influx of like the Cube Smarts and just self-storages popping up Airline Highway all along these interstates. So number one, where does that trend come from, and what got you into that space?
Supply and demand, right? Supply. Well, first of all, I have a lot of apartments, and for all you that own apartments and own rentals, right, who you dealing with? People, right? People. And the worst thing is, and I used to always tell my staff, do not let me talk to the tenant, because they will tug at my heartstrings, they will tug at me and give me every excuse in the book, and I would always let them, I always give them more time, right? And so I was like, I cannot deal with tenants, right? And then tenants, what? It's not their place, right? They're going to tear it up, right? Storage, they move out, you open it, you sweep the floor, and they're out, right? And I have some markets on a price per square foot that is just as good as a price per square foot on a residential rent. The difference is you don't have the turn costs. The turn cost eats you up. They do. That's why I like storage. But you just can't build it and expect it to be successful. Supply and demand. So when I developed a facility in New Orleans, I was ahead of the supply curve. But would I do it today? Probably not, because you can go downtown, you see 3 of them that popped up right on the highway. You saw 2 that popped up on Chapatulas. Saw another big one that they built on Tulane Avenue. So that's 7 facilities dropping about 600,000 square feet. In my feasibility study that I ran, when I built mine, was a 600,000 square foot shortage in the market. Well, those 7 facilities or whatever that they dropped, they're oversupplied. And I guarantee you that they're not all full. They probably have some vacancy. So just because of something is hot and everybody's doing it, because look, self-storage over the last 3 years has been like the golden child. It is do no wrong. But you still have to look at your supply and demand. Because if you develop, you're starting with what? 0 leases. You got to fill it up. You can't just build it and they will come, so you got to know your supply-demand metrics. And how you figure that out is you look at your trade areas. Trade area for where your customer base is going to come from. And that for trade area for us is a 1 and a 3 mile. And you add up all the supply that's in that marketplace and you have a population in that trade area. And the national average for self-storage per person is about 7.84 square feet per person. That's what they rent in a trade area. So if my supply demand metric is under the national average, that tells me we could be undersupplied and there's some adequate demand. But if I do my supply demand metric and my square foot per person is $11 to $12 per square foot per person, then I'm teetering on being oversupplied, supply demand. It's the basic law of economics, and it has a lot to do with real estate, right? Same thing with apartments. You just can't build them. You're seeing now that a lot of these Class A apartments that they built over the last couple of years are not full anymore, right? Now, I want to see what happens with the self-storage industry this year and how much is tied to the housing market. Because think about it, self-storage is tied to the housing market. Because when people are moving around, what are they doing? They're storing. But if they're not buying and selling houses, are they storing? So if you didn't buy it right, and you didn't do your homework on that supply and demand, you could be in trouble this year with the interest rates staying where they are and people not buying homes. So never get caught up in the buzz, right? What's hot right now, and get off of your fundamentals. Because that's how you go underwater, right? As you follow in the crowd, you're doing what everybody else does. This must be hot, this must be good. I can make these numbers look a little bit better on paper, right? There's an old saying, pro forma is Latin for lie. I can make a pro forma look like anything I want it to look like. I can make that investment look really good on paper. But is it a reality? Can it happen? And in any investment, what is the worst case scenario that can happen? And how do I protect myself against the worst case and build a strategy around how I acquire buildings? What is my worst case scenario? Like I said, if you're in the residential space, I said I want 3 exits. I don't want just 1 exit because there's not much I can do to mitigate if that 1 exit didn't work. But if I have 3 exits, if one doesn't work, I'll move to the next one. It's a lease option, a lease purchase, a bond for deed, or straight rental. But my cash flow is enough to cover my debt that I can get in the marketplace. That's what you get in the first-time homebuyer arena. You know, so same thing with the Airbnbs, right? How many people you know said, man, it's really good right now. I'm getting X and X per night, and my occupancy is at 70%, 80%. But what if it's not at 80%? What if it was down to 50%? Can I still cover and make a decent return? I can't tell you how many. I have a lot of Airbnbs, I do. But you know what? I didn't lose track of my fundamentals when buying those properties, and I projected it at normal rental cash flow. And if it makes sense at that, guess what? I have multiple exit strategies. I'm not banking on short-term rental. I'm still buying it at a percentage all in after I make my land acquisition, my improvements, below what I can sell it for. I'm not going to overpay. Because one of my exits would be to sell that short-term rental. One of my exits would be I'm just going to rent it out, and I'm still going to make a return on my money, right? So never go into a strategy with one exit. If it doesn't cash flow on a long-term rental and you're paying above a market price, and you think that's going to work out for you for eternity, now you're starting to come to that realization today that that's not going to work. So if there's anything you take out from this in that space is multiple exits.
Yeah, tell us a little bit about strategy. You discussed feasibility, so how you make sense of even approaching these self-storages. So now if I jump into this thing, we still got to acquire them, right? So what's your strategy on
with
acquisition?
Feasibility studies, the first time with anything, if you don't know it, you pay somebody to do it, right? And then after you read those feasibility stuff multiple times, you're like, man, why am I paying 10 grand for somebody to do this? I can do it myself, right? Because it's really not that hard, right? So with anything, and our approach life is I don't have to know how to do everything, but I got to know somebody who does know how to do it, right? And I'm going to go find out from that person how to do it. But if I do go to that person, I better bring him something of value too, because I'm asking for his time, right? So go back early on when I asked those rehabbers if I can come walk their properties with them. I didn't do that until after I gave them a deal, right? Because I felt like at that point I earned the right to at least come by and figure out what they're doing. John used to do that with me a lot early on. He used to want to come walk the properties. And that's what you do. But you brought me something of value first, right? So from a feasibility perspective is hire out first, learn how to do it, see how people are approaching something, and that's how you figure out how to really underwrite it. What was your other question?
Strategy. So you're jumping into this thing. What's your strategy on acquisition? We talked about exits, but how do we even get these things and build up a pipeline strategically?
Well, it's going back to supply and demand, right? Everything to me starts there. So I said, okay, New Orleans, I probably wouldn't buy one, right? Because I think the supply-demand metric curve is off. Does that mean because I live here, I have to develop here? No. What do? You go find a market where there is demand and there's low supply, and you go hunt in that market. And when you make the transition from residential to commercial, you're working in a whole different arena of professionals, right? So I couldn't imagine trying to build spec homes, not being there on site with a residential contractor, right? And you have to get on a plane ride to go see what's going on. Your product probably is not going to be that good unless you got a really good person there on the ground, right? You'll probably screw up a lot at the beginning until you find the right guy. So you'd have to have patience to weather that storm until you build the right team in that market. But when you get into that, until you get into the commercial space, you're dealing with more professional. You're dealing with professional operators. I don't operate my facilities. I hire a professional third-party management company. I do not want to deal with rental properties. And all my rental properties here, I have employees that manage them. And even that, I'm going, God, why am I still doing that? I just need to put it on third-party management. I didn't get into this business to manage properties. I didn't get into this business to be a contractor, right? And then once you start realizing that you have enough knowledge to put extended teams together and they're doing most of the work for you, you just got to be the architect that puts all the deals together, right? Talk about it. The best thing is, where do I hunt and how do I raise the money? That's really all I focus on now. Everything else is professionals to handle. Right? You have your professional architect, you have your attorney, you have your bookkeeper, you have your contractor, and you have your professional operator. But outsourcing raising capital, that one's a tough one, right? You kind of got to do that yourself, right? Because nobody's going to sell your deal better than you, right? And you better believe in it if you're going to sell it.
Yeah. So talk a little bit about one of your deals. So far as how you found it, what was the value add? What was the square footage that you bought it at, and where is that now? You could do the climate safe one if you want to.
Okay. Yeah, we'll take the one in New Orleans. I don't know if, you all are from New Orleans. I had a storage facility on Franklin Avenue, right by the overpass. At the time, it was a three-story, it was an old Pittman construction building. So it had a three-story office building. It had two 15,000 square foot buildings off to the side with 20-foot eave heights. And so that's how many sets? 15, that's 30. So it was about 50,000 square feet gross at 1.2 million is what we picked it up for. So let's see. Actually, I think it was 60,000 divided by, let's say 55,000 square feet. That's $21 a square foot, right? Could you build 55,000 square foot of building for $21 a square foot? I don't know what it would look like, but you won't get very far. And that's inclusive of the land that is underneath it, right? So again, going back to the numbers, what does it cost me to build new? Then I have to buy the land. But I just picked up a building with 55,000 square feet. Now I'm going to get to the better part. 55,000 square feet at $21 a square foot to include the land. You don't have to have a financial degree to figure that out, that makes sense. The best part about it is I told you it had a 20-foot eave height on the two 15,000 square foot buildings. You know what I did? Poured a mezzanine deck in the middle. Now I got 30,000 square feet. So I just doubled my square footage for not much extra capital invested. And I got a 70,000 square foot building. By the time I finished renovating, I was in the building for around $4 million. I brought in an equity partner, so a $4 million project was a $1.2 million raise. Had a guy said, I'll take it. Took the whole thing, one investor. I gave him a 8% preferred return with a 20% carry. So you got 20% ownership with an 8% preferred return. We sold that building last year for $10.6 million. But from 2017 to 2022, 5 years.
But it's still cash flow, and
It was still cash flowing along the way.
it had a bowling
Yep.
alley in.
The bowling alley was the first conversion that I did. That was in Lake Charles, Louisiana.
Okay.
But also the timing was very good, right? I didn't plan on selling that building. I would say, this is in my backyard. I'm going to keep this forever, right? But how many of y'all know that the real estate market was hot last year? And cap rates were at an all-time low. That sold at a 5% cap rate. When I originally ran the numbers on that investment, I didn't project I was going to get to 10.6 until 10 years into the project. I was able to get it in 5. Why would I not sell? So never say never, right? Never say I'm going to do this forever. If, again, going back to I am an opportunist. If the opportunity arises to hit my projected returns in half the amount of time, you take it, because everything is not always unicorns and rainbows. Markets do this, and they do this, and they do this. So it is true, you buy here, and where do you sell? Up here. Self-storage was at the top last year. It was there. Will it still be at the top this year? Probably so, because of what you're working with. Who wants to be in retail and who wants to be in office right now? So, and everybody wants to be in apartments. Everybody, right? So never say never, but also it wasn't for my gain, right? Who did I have to steward on that? Not for Chris's gain, but I have an equity partner that I could make him a lot of money, right? Guess what he wanted to do? When's the next one? Right? What is the next one? And we rolled it in. We 1031 exchange, and that's how I ended up buying 5 properties. I sold the Lake Charles and the New Orleans one at the same time, and we 1031 into 5 properties. That's how the velocity of your money and how you could really catapult is by what? Not how much money you make, it's by how much money you keep. I did not want to pay taxes on that, but I also didn't see a dollar, right? It all got deferred into a new project. So, and I'll probably defer it to death because I don't want to pay Uncle Sam.
Yeah. What's some of the misconceptions in that self-storage space? So one would assume that it's
Build
easier.
it, and you will fill it up. Right?
What's
What?
the reality?
Supply and demand. You got to know your market. You got to know the existing supply, and is there a demand for the supply, the extra supply you're bringing to the market? Why? Because I'm not buying new, because if I'm buying new, I'm paying a 5 cap. I don't know about you, that's not a good deal to me. Right? So I need to develop to what? Unlock and create new value. So I need to develop, but I'm just not going to go develop anywhere. I got to go develop in the right place that has that supply demand that works in my favor, that I can lease it up, raise the cash flow, and then sell it. And again, we talked about this later. Once you go from the residential to the commercial space, you now run a business, and the better you operate it, the better you buy it, and you manage your expenses, you increase your revenues, and you got a higher NOI, your value only goes up based off the net income of the property. It is not tied to what the home sells for next door. So again, less control on sales comps, more control on income. That's why I like it, because I can control the value of the property, not what a motivated seller sold his house for down the street, and that got put in my valuation when I go to sell it. So there's right, I don't like anything I can't control, right? And that's what's going on with the Airbnbs right now, right? Who can control what the council is going to do right now? And I don't even want to go into that because it's enraging, but they're always moving the goalpost, but you can't control that. So is that a sustainable business model? It's not. It's not. So that's for the people that bought on that speculation that it would always be unicorns and rainbows are not sitting in a good place today, and I guarantee they didn't have multiple exits. So numbers, right? You asked me about that. I went through that example.
Yeah. I want you to go into Airbnbs.
You want me to go into Airbnbs?
So, because in addition, going into your portfolio, so we went into wholesale and investing. Now we into storages. You like to have control. As far as diversification, what do you see now? How Airbnb can fit into a portfolio in this particular market with the uncertainty?
I still believe in the fundamentals that we live in a transient society. I do, right? And I mean, we all know that people are getting married later, right? They're having kids later. They want to move around. They're not buying a home until later. They want to be transient and go try new areas, right? And we are now seeing what the effects of COVID with the remote workforce. I think it's really going to impact the office market, and you're going to have a lot of traveling professionals. So I think the Airbnb model would work, but get the hotel zoning, right? Because why? They can't take that away from you, right? Because you have the best zoning that you can have, and you can find that hybrid model within that, not be a traditional hotel, but be the hybrid of the Airbnb model and a hotel model. Because I can tell you this, boutique is in, right? If you've got a boutique brand, that's in right now, right? Who drinks Budweiser anymore, right? They just don't drink. Everybody wants to give, what's the IPA? Right? They want to drink the fancy beer. Right? Think about all those staples of those companies back in the 80s and the 90s that were all about the brand recognition. Well, I think it's turned opposite. It's boutique. So if I like that hospitality model, I want a boutique hotel. Again, I like that model because why? My hotel will now be valued off of income rather than have an Airbnb house that what? What happens now if you had a bunch of short-term rentals and everybody just got hammered with the zoning law? What do you think is going to happen to the market? Everybody's going to put their home on the market at the same time, right? What do you think? You think you're going to get the price you thought you would when you bought it? No.
Supply and demand.
Supply and demand,
yes.
right? If everybody's got hit hard with the same rules, everybody's going to be making the same move at the same time. Why? Because everybody moves in herds, right? Follow the herd. No, I don't want to follow the herd. I want to go in a different direction. Don't follow the herd. You get in trouble, right? What do they say? If you go to a grocery store and the bag clerk's handing you a business card and saying, I've got properties for you, you go, man, things are really at the top. We're at the top right now because everybody wants to be in the business. Yeah. Right? That's what I'm saying. Right now, I want to wait a little longer. Right? Right now, I need to be in capital raising mode, not in buying mode right now. I want to have a good plan right now to capitalize on a distressed market. Because look, 2008 will happen again. It's not if, it's just when. Right? How many people said, man, in 2008, I wish I had a lot of money? Right? Who said, I wish I bought a lot of lots in Lakeview after Katrina, right? Or, or wherever it was. Prepare for the next cycle, but don't buy when everybody's buying. Sell when everybody's buying, and buy when no one's buying. Don't follow the herd. Go the opposite direction of the herd. Always, 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 always.
Yep.
Again, that's why I consider myself not a one-trick pony. I'm an opportunist. I go where there's opportunity, and I'm not afraid to pivot in a different direction. But pivot the opposite way people are going.
So what does the future look like? So you raising capital right now. If you had to predict the way things looking right now, what do you think in the next 5 years is going to look like for the market?
Man, I don't even know if I want to go into all this right now, but
this market.
How many of y'all read a lot of Ray Dalio books? That is some pretty eye-opening shit if you read his books. Excuse my language. Our biggest threat right now is our global currency, right? Or if that will sustain, the dollar will sustain as the gold standard in the world, right? The dollar has always been a storehold of value, right? I don't know if we're going to be able to say that in 5-6 years. And I'm not a pessimist. I'm just a realist, right? So if that were to happen, what assets do I want to be in, right? Think that way, right? Think worst case scenario and how can I protect myself against that worst case scenario? Because if any of y'all read his books, I think it's called The Big Debt Crisis. He goes all the way back to BC area and he takes every world power and he takes you through the rise and the downfall. And it was all in a 100 to 150 year cycle. Well, I can tell you the U.S. is on that downward slope right now. Look at the things we're fighting about as a culture, right? And we're not even keeping our eye on what's happening because China's running right up behind us and they want to overtake us. And if they do, they want their currency to be that storehold of wealth. And they're already making alignments right now as we speak. Will that happen in our lifetime? I don't know, but I can tell you this, I'm not doing this just for me. I'm doing this for my future generation, right? and the legacy that I want to leave behind, and I want to make sure they're well taken care of, because it's going to be in their generation that the USA is not going to be the gold standard anymore. It will happen. You just got to look back at the history. If any of y'all have not read that book, I would absolutely recommend to read it. It will open your eyes as to what's going on right now, because they are not talking about it.
And you talking about Ray Dalio principles?
I think it's the Ray Dalio big debt crisis.
Okay, I got you.
So you got me on that topic, because you said, what are the strategies moving forward? I'm also trying to figure that out. I don't have all the answers, right? Because I really do believe this year will be very telling, right? I don't know what's going to be the next domino to fall, but you can just see that there's some disruption out there, right? Where the opportunity is going to be, we all know we can go after the office market, right? I love buying buildings cheap and repurposing, right? If you can find a way to convert office spaces to another use, I think that is a very good opportunity. Very good opportunity.
Well, what's the example you've seen like that already? Besides storages, they've been repurposed into what?
Right, so right now, I like old motels, right? I just bought an old motel on Jefferson Highway. And I'm gonna repurpose that into a boutique style hotel. And it's got some front facing, it's got a metal warehouse that I'll able to repurpose that and kind of create a mixed use community. And it's less than a mile from Oshner. So I like that, because why? It's got a hotel zoning, and you can do something with an old motel, right? You can repurpose it. So I like any buildings. Why? Because I like a percentage of replacement cost, right? I stick to those things. You'll hear me say about it a lot, because that's my strategy. Supply and demand, and what can I buy it at a percentage that it would cost me to build it new? So I got those units for a very good price with a building and the land underneath it way cheaper than it would take me to build that new. And I think the right model of a hotel would be good. So I see that as an opportunity. If you can do something with office spaces. I like the big box retail to convert to storage, because it's an open space. I wouldn't want an office building to convert to storage, because it's too much demo, right? The sizes would be all off, and it may bring that up to, once I'm all in, I may be at or near replacement cost. Why go through that headache? I'll just build it new if I really like the market and there's adequate supply and demand. So I think adaptive reuses and repurposes of buildings that no one can figure out what to do with, buying it at the right percentage of replacement cost is your opportunity. Because why? Construction cost is high right now. It's high. And I don't think it's going down. So, I mean, anything, percentages, I mean, I want to be below 50. I mean, ideally. But that percentage will depend on a lot of other factors, like what is the true cost to build it, the land value. But I think anything under 50%, I'd be all over it. But it's still got to meet the supply-demand metrics. Right? Just because I get it at a good percentage replacement cost doesn't mean I'm going to ignore supply-demand.
Well, I think that's an excellent time to start asking questions from the audience.
All right.
Any other questions from the audience?
About that.
What was the question?
It was, what is my air? What did I look for? How did I measure the Airbnb? And then what is my model moving forward? What am I going to do with the units moving forward? Right? Is that right?
All right, let's do it.
All right. So originally I used to always do a lot of tax credit renovations. Always big on tax credits, right? You got to hold them for 5 years. So I had to hold them. So I had the option, and this was, 2015, 16. So Airbnb, at that time, it was really hot, right? Being opportunistic, I'm going to do it. But still, thank God I still realize this, and I'll repeat it again. I will not move forward with the deal on pro forma Airbnb rents. I will not. I will move forward on it if it makes sense at market rent. So a lot of the units, I just went back to regular rental. The ones I sold, same thing. I want to be in it for no more than 70% of the value, so I can sell it. And I sold a lot of them last year because, to be honest with you, the juice is not worth the squeeze. The headache is not worth it for me anymore. It's not. Right? I have a lot of commercial ones, and I'm going to keep those. But any of the residential ones I had, I used to try to find strategies about messing with the homestead exemption percentage and the whole bit. It's just not worth it. Now I think the rules, they want you to put it in your personal name. That's asinine. I wouldn't do that.
All right. Next
So
question.
I would do it at your homestead exemption, and that's it. I would not try to work around the system because they're out to crucify you right now with fines, and they're levying them. Shoot, they're even trying to cancel the commercial permits right now. So I don't think it's a sustainable model. It's too much. It's you don't have a sustainable model where the goalposts are always moving, right? And the things you can't control. You cannot control public policy. So why would I want to put my money or work somebody else's money into something that could change tomorrow? It's not a good investment strategy, but too many people get caught up in the revenue at the time, following the herd. I did, right? But I still didn't deviate from my original fundamentals when I did buy them.
John?
If it was a hotel. Like I said, if it was an old motel that I was able to convert and repurpose. Why? Because I have economies of scale with multiple units, right? Economies of scale is the key. Would I go into a market and do one house? No. And it would take too much time to build one at a time, right? Here's another example of economies of scale, right? I love single-family homes as rentals. I think there's no safer investment than single-family homes. But what is the problem with single-family homes? Scale. You got to get a lot of them in a market. So I target these tax sales, right, in other markets where these institutional buyers will basically go to the tax auction and buy them in bulk, right? But they're just buying for arbitrage. So, but if those homeowners don't redeem, then those holders of those tax certificates are like, man, what do I do now? I just want my money and move on. I don't want to evict these homeowners. I don't want to renovate this property. I don't want to manage these tenants. So what do? They get their return, a little bit of a premium, and they move on. I bought 90 homes in Rochester, New York, of all places. But I bought them at $12,500 a home. And I'd only have to put about 20 to 30 to 40 in them, depending. So I'll be in these properties across portfolio of about 50,000, but they'll rent for $1,350. So that's good. What percent? Can you build a house for 50,000? You might even get the land for 50,000. But those, and you have scale. Where I was going with that is, you have scale. You have multiple homes. Am I going to go buy one home at 50,000 and rent for $1,300 or $1,350 a month? No, it's not worth it. So I wouldn't go do the same thing, go into one market and buy one that I'm not here or around. I would want to go there and buy it in bulk to get scale, to have other people manage it. If you go to a property manager and you ask him to manage one property, do you think he's going to give you a lot of attention? But if you go to him and you ask him to manage 80 of them, do you think you'll get more of attention? Absolutely you will, because you become now one of his bigger customers. So he's gonna make sure that you're well more taken care of than you are with one home. I think one property is a recipe for disaster, unless it's a social engineering, you like the area and you wanted to buy the home because you wanted to utilize it a couple weeks out the year and you can break even or make a little bit. At that point it makes sense. But from a pure investment purpose, no, I wouldn't do that.
Question. You gotta repeat.
Oh, I have to repeat it? Okay. The question was, what was my mindset to make me want to transition out of your local market and start to look at other markets? Is that right? Basically, when I realized that I couldn't do everything myself, right? Or I am somewhat of a control freak, I'm not gonna lie. So when you're renovating a home that's close by, what are you gonna do? You're gonna go buy it every day, right? But sometimes just staying away from it and letting your team work, or the team that you put together, and realize that you don't have to do everything yourself. You can find a way to motivate others to work for you and to your benefit. You realize that you can do more things with your time than going to be that control freak, going by there every day. And that's where starting to go, well, I can do that anywhere. It does not have to be in my backyard. Once you can say, I can take a step back and let the process work itself, and realize that the world is a bigger pond than your backyard, and start to look at, there's a lot of opportunity elsewhere that you can take advantage of, because I'm looking at some supply-demand characteristics and see where there's shortage of whatever it is that I'm investing in, right? And you can get those, you can hire others to get those metrics for you, and I know what markets are undersupplied for storage. So I know I'm gonna go hunt in that market because I have more of an opportunity for that project to succeed because it's based off fundamentals. And it doesn't have to be in my backyard, because I've got a good operator, right? I've got a good third-party manager. I've got a good construction team. I've got good attorneys. I've got good CPAs. I've got a good team. So when you have that right team, that fear of investing out of your market becomes less important, because you've learned to now take a step back and realize that you can't control everything. I guarantee that's why a lot of others don't move out of that market, because you want to control everything. Okay, so what the question was, what other spaces or what other education that I look at on any given time to kind of further my knowledge? All the time, right? Yeah, I have been on a Ray Dalio kick lately, because I've been kind of really wanting to understand the economics and what could potentially happen down the line, and prepare for it, right? I always like to read leadership books, right? Because you always want to strive to be a leader in anything that you do. So I enjoy reading those books. I like to stay, so if I'm in a space, I do like to always go to events. I do like to network, and I do like to meet others that are in your field. I just can't stress the importance of that, right? So I go to a lot of the storage trade shows, and you always stay on the cutting edge of what's going on. And I'll give you an example. They actually had the Self-Storage Association meeting in March, and it was in New Orleans, actually. So I didn't have to go far. It was at the convention center. And the big thing right now is I guess manless or employee-less facilities, right? And I remember at our Lake Charles facility, we thought that was a great idea early on. We had this clunky kiosk where people had to go in and call, and they can put their credit card in and they can rent a unit. But it was like going to an ATM. It just didn't have a lot of bells and whistles. Well, now Janus, which is the door and lock company for self-storage, they now have these where you don't have to put the locks and actually have a key. You can walk right up to it with your phone, unlock it, put your phone up to it, and unlock the door, right? Well, we all knew, being from the Airbnb space, that's pretty common, right? Or hotel space, you can do that, but it just didn't transition. And then they're like, man, you need to go and see what they're doing with these manless facilities. And so I went and talked to this operator company that just blew me away with the technology that they have. And they were out of Birmingham. Well, I have a building in Birmingham. So I immediately set an appointment with them. When I went up there, I went to go see the technology live, and I was blown away. And where it is you walk in, they have 2 iPads, and they have a big screen and speakers. When the door opens, it rings an agent. And literally, they have cameras everywhere. They have model units. And when the guy comes up, he walks you through the whole sales process. So they have it pretty dialed in and pretty automated. So for the first time, I'm like, man, I could see how this could really make sense and could unlock some potential. Because before I go, I'm not looking at any facility that's lower than 80,000 square feet, right? Because why? I need economies of scale to be able to have a full-time employee there, a part-time employee, and I need a certain amount of square footage to make that make economical sense, right? So now I'm going, man, now maybe these 40,000 square foot facilities could make sense with this technology, and that can potentially unlock other opportunities. Because if you go into the top 50 markets for storage, you're gonna have a lot of competition. But if you look at the, what you call in the industry, tertiary markets, smaller markets, mid-markets, those are usually stepped over by the big boys, right? But if you can get an operator system with that technology, you save about $90,000 in salaries, and what does that do to your NOI? Put that at a 6 cap and do the math. Divide 90,000 by 6%, and that will give you the additional value you just unlocked in your facility just by pulling that one lever. So when you say education, I like to read books, right? Better than putting on the news, right? You gonna learn anything from the news? You gonna learn anything from reality TV? Right? There's not many educational things out there. Did you learn much in college about what you're learning here today? No, always continue to improve yourself, because no one's gonna do it for you, I can tell you that. And if you're in a certain, if you're in rehab, you're gonna go to learn more about it, become a master of it, and learn ways to do it better, right? Anyone else? Did I answer your question? The question was, are there any sales courses that I recommend? I mean, I do kind of feel I was naturally gifted with sales. I didn't have to do that much, but there was a lot of other things I had to learn. But man, I don't know what would be good. I'm trying to think from the days when I did study those real courses, who was good. But I mean, sales is fundamental, right? It's knowing what's important to the other person, right? And your job is to find out what that is. If you can find out what that is, and you can make a deal, right? Because if everyone gets what they want in a transaction, you're going to make a deal. If you go into a transaction, you only care about what you want out of the transaction, you're not going to make a deal. I guess what I said earlier is one of my favorite questions to ask is, you know, if you were to get this money, what would you do with it? Because you're going to figure out right there what their hot button is, right? What's important to them? What is this money going to do for them, right? Whether it's, I want to move closer to my kids, right? I want to move closer to my mother, or whatever it is. Or I have this surgery that I have to have, or this something, this impact in my life that I need money, right? And then as sales, you find ways strategically to bring that back up, right? Don't you want to get closer to your daughter? Well, this is a way for you to do it, right? And you constantly hit on those hot buttons. What was the other one I used to always say? Give me a minute to think about it. Oh, yeah. Okay, this is for all you wholesalers out there. The worst question you could ever ask is, how much do you want for your property? Do not ever ask that question. A better question is, how much do you think your property is worth? You see a difference in that? Because if you ask them how much they want for your property, what do you think they're going to say? How much are you going to offer? Then you're stuck. You're stuck. But how much you think your property is worth is a very different question. Or you can phrase it, if I were to hire an appraiser and send an appraiser out here to value your home, what do you think that appraiser would appraise it at? Very different question, right? Because what information are you getting right now? Their perceived value, right? Not how much they want. How much do they think it will be valued? Because you know off their perceived value if you're going to make a deal, right? If they say their perceived value is $100,000 over what they're going to pay for it, do you think you're going to make a deal? I would stop wasting my time, right? But if their perceived value is right in line or a little bit over what you're willing to pay, you might have the ability to make a deal. But never ask the question, how much do you want for your property? Believe me, don't do it, because you've all got the answer. Well, how much are you going to offer? Well, I don't know. then you look unconfident, right? Does that help?
Yeah.
All right.
Well, everybody give a round of applause for Chris. Thank you for your time. Good job.